What's going on, traders? Welcome to the SPACs Attack, where we talk everything SPACs. And today we are pulling out our movie from the Redbox and gonna get into the Redbox SPAC. Yes, I said it. Redbox right here on SPACs Attack. You guys hit the like button. Let's get the show started. Let's go. Like Robert says, you can't kill the box. And another thing you can't kill is Chrisopedia. What's going on, my man? How we doing?
Hey, what's going on, Mitch? Yeah, happy Tuesday. We got an exciting interview coming up today. This is one that a lot of people probably forgot is coming public again. So Redbox, which Redbox was formerly publicly traded. It was part of a larger company, but now going public once again via SPAC merger. So I know I've rented some Redbox movies before, Mitch. So this company makes money, and nothing to laugh about when companies have revenue and earnings. So we're excited for that. We also got some headlines to talk about today as well.
Hey, I know Martin is ready in the chat. He wants to find out what's going on with the Redbox life. We'll definitely get right into Redbox. But first thing we always do is get into the SPAC headlines of the day. So, Chris, why don't you do what you do best and take us back to those headlines?
All right, so up first, let's talk analyst ratings. So the first one we've got here is RIDE, Lordstown Motors, RIDE. So Morgan Stanley analyst Adam Jonas lowering the rating to underperform from equal weight and also lowering the price target to $2 from $8. Says the agreement with Foxconn buys time, but now there's little left for shareholders. That's similar to what I said yesterday. Selling the factory, obviously a big catalyst for the company, gets them cash, but the question is, will they need more cash going forward, and is that enough? And then we have Latch, LTCH, Bank of America initiating coverage with an underperform rating and a price target of $10. So keep an eye out on this one. This is the Smart Lock, Smart Home. Already trading over $10, but it has come down from the $15 level. So that initiation here, thinking that there is more downside ahead. And then we have Catapult, KPLT, which we've talked about a lot recently. Buy now, pay later, definitely a hot sector to be in. Cantor Fitzgerald initiating coverage with a neutral rating and a $6 price target. Shares under $5 right now. They were over $6 last week. This also has been a stock mentioned as a high short interest stock. So be careful with this one. Highly volatile right now, but definitely one to keep on watch for that buy now, pay later segment. And then we turn to our news. Up first, we have Genius Sports. So Genius Sports will activate in-stadia sports betting with the Philadelphia Eagles. So signing a partnership with the Eagles. Again, Genie has deals with lots of sports betting platforms, but now getting a deal with a sports team. And that's something we've seen with a lot of these sports betting companies launching exclusive deals. So nice little play here for Genie to kind of go after a team themselves. We'll see if this trend continues. Then we have Romeo Power, RMO, battery technology company. They announced that they are leasing a new headquarters and manufacturing facility in California that will support its expansion of battery development and testing capabilities. So it's a 215,000 square foot facility, which includes 191,000 square feet of industrial space that they will be using. So keep an eye out on Romeo here. We could get news from them soon about maybe what their plans are going forward with this factory. So RMO. Then we have Spire Global, SPIR. This is one that Mitch brought up yesterday. So they announced a deal today with a longtime customer, Lat Connect 60. So this is another deal signed for them with an existing company. This is a maritime deal. So this company, not only space, but also maritime segment. So keep an eye out. SPIR has been a high flyer of recent. And we have Butterfly Network, BFLY. They announced the release of IQ Plus Vet, their portable ultrasound, which they call the next big shift in veterinary medicine. They also announced international expansion and new partners. So 19 new international markets. And the new Butterfly IQ Plus Vet is the second gen device, which it brings sharper imaging, a new guidance tool, and hardware improvements. So some of those new countries, I mean, we've got Australia, Austria, Belgium, Canada, France, Germany, Italy, the Netherlands, Spain, and the UK, and others across Europe. So definitely keep an eye out. BFly, new device, new country expansion. Two big news items dropped in one press release from the company. Then we have DDMX, which is merging with Codere, an international sports betting company. So they announced their second quarter earnings, net gaming revenue of 21 million euros, up 43% year over year. Mexico and Spain revenue was 6.4 million and 12.6 million respectively. Those numbers up 108% and 23%. So you can see the Mexican market continuing to gain. And they guide for total net gaming revenue of 81 to 86 million euro for fiscal 2021. And then one of the hot SPAC deals that will get a lot of attention in the next quarter, AGC, which is bringing Grab public. Grab increased its stake in Ovo to 90% by buying out some stakes from Tokopedia and Lippo. So AGC expanding into several areas and high growth sectors in Southeast Asia. So one to watch. And then Nikola reporting that they will announce third quarter earnings on November 4th before open. This is a stock that has been known to run on news. So we'll be watching this one going into those earnings. Maybe they announce some new deals or some progress before then. And then we do have two deal votes today. We have ITAC merging with ARB Robotics, 4D imaging radar technology company, and STWO merging with ESS Tech, a long-range battery company. So no new deals announced today, just those two deal votes to keep on watch, and then those other headlines. That's what I've got for headlines today, Mitch.
All right. Well, definitely going to be paying attention to see BFly. I do like that chart. Going to keep a close eye. Interested to see what happens now with this new release and seeing if the stock can get a lift. But as we've seen, BFly has been really pushing, trying to get their name out there. We saw them on the SpaceX flight, and I think that really gave them even more lift, showing that it could work in space. And I mean, if it works in space, I'm pretty sure it's going to work down here, right? So I think we're super excited to see what happens with that product. And with that being mentioned, we also talked about Owlet's SOC yesterday. We'll be looking to see if we get any headline news from there and what the company's going to do. Did we get a response, Chris? Did we get anything from the company?
I think we got the typical response of the company saying that they were looking into it. I'm seeing now, Mitch, it looks like Bank of America also downgraded shares to neutral and lowering the price target to $5.50. That just came in the last hour here on Benzinga Pro. But yeah, okay. Owlet is, exploring their options at this point on that FDA notice letter. Mitch, that BFly news, I mean, that's pretty exciting, right? Two big items, definitely. I think. I mean, some companies would release this in two separate press releases, right? International expansion, 19 new markets, and then also the release of the VET portable ultrasound, call it 2.0 IQ Plus. They put it both in one press release. So I wonder, how much this will help the stock today. But I think long term, this is pretty interesting. And Mitch, you said it, right? SpaceX, I mean, they were just aboard SpaceX. They also got a shout out at the Apple event, right? Showing off those iPads and actually showing how easy it was to use their portable ultrasound. So when you have two big companies like that, SpaceX and Apple, both highlighting your product, I mean, I think that's a bullish sign there. So BeFly continues to be a possible long-term play for myself here.
All right, so now I want to do a big push here because we are going to get to Redbox, but I need you guys out there. Looks like we got over 200 people watching live on YouTube right now. Let's get those likes up there towards 50. We need 20 more likes. Let's get those likes before we get to the interview. I think this is going to be interesting because, I mean, who hasn't ever used Redbox? I mean, I think we both have, Chris. I mean, I know that you were talking about before the show, you were talking about how you use it often for the kids. That's
yeah,
always...
the kids love it. When the kids say, hey, let's go to Redbox, I mean, you know that the company has got to be doing something right? Because the kids, what do the kids do, Mitch? They drive the wallet, right? They drive the spending. So, you know,
that is for sure.
We subscribe to many streaming platforms, but we also go to Redbox. I mean, these kids want to see every movie and every show that ever existed. So in order to do that, you got to branch out to all the different platforms, right?
That's for sure. Let's hit those likes. Let's get them up there. I see them coming in. And I'll just tell a quick story about a time where I used to do after school counselor. Yeah. I was watching your kids while you guys were trading the markets. And I used to rent a lot of Redbox movies. And one time the kids broke the disc. I actually called the customer service of Redbox, and they actually didn't make me pay for the broken disc. So gotta give a thanks to Gavin when we bring him on for that. But hey, customer service is always a great thing. Let's go ahead. Let's get right into our interview now. I see the 50 likes there. Let's get right to it, Chris. This is when we unlock the SPACs. And I know a lot of people have been thinking about it. Redbox is a stock? Is a SPAC? What happened? Let's find out. Let's unlock the SPAC.
All right, awesome. Yeah, another exclusive interview here on SPACs Attack. Joining us on the show, we have Galen Smith, the CEO of Redbox, that company going public with Seaport Global Acquisition Corp, ticker SGAM. And when the merger is completed, that new ticker RDBX. Welcome to SPACs Attack.
Thanks so much, guys. Great to be with you this morning.
Definitely
awesome.
Excited to hear the questions here. We're going to go with Chris first, and then I'll be back with some of my own.
Awesome. Well, let's dive into the questions here. So one of the things I noticed, Redbox has been publicly traded before. It was part of a larger company. I'm wondering if you can give viewers, your history and experience with Redbox. I noticed that you worked for Coinbase years ago, and now the CEO of Redbox. So just take us back to your history with the company.
Yeah, sure, Chris. Happy to do that. One thing I want to do right before I get started, though, is just remind everybody that today my remarks may include forward-looking statements, and everyone's encouraged to read Seaport Global Acquisition Corp's filings with the SEC for discussion of the risks that affect the business combination and Redbox following completion of the proposed transaction. So with that out of the way, yeah, I've been with the company for 12 years. And actually, back in 2008, was working on taking the Redbox public when I was a banker at Morgan Stanley. And I loved the company so much that I wanted to join it. So I joined about 12 years ago. Most recently, before we went private, I was the CFO of Outer Wall, which was the ticker OUTR that you were talking about. And the opportunity that we had, Chris, was really for us to focus on what was most important to Redbox. And that included two key areas. One was really building out our marketing assets, which we've done. We've grown a loyalty program from 5 million consumers to 39 million consumers. And then the other thing is we invested in our digital transformation. And that's really why we're thinking about going public now, is to accelerate that digital transformation. And so we've got a number of offerings that I look forward to talking with you all as we go through this interview.
Perfect. So yeah, one of the first questions we like to start with is, why a SPAC deal was a traditional IPO considered? You kind of answered that, but maybe more on the SPAC side, right? What drew you to that side of the market to bring Redbox public here?
We considered all options, but we felt that going the SPAC route was a way for us to accelerate and get through the process quicker and really focus on the opportunity that we have as we accelerate this digital transformation. So yes, we looked at everything, but felt like this was the best path forward. And we found a great partner in Seaport Global that understand what we are trying to do in this transition as we make this move from a legacy DVD business to a multifaceted, multi-entertainment window company.
Perfect. So, the other area with SPACs is sometimes you can bring in, some strategic investors and partners in the pipe deal, right? So on the Redbox pipe, I mean, it jumped right out to me, right, that we had investors like Screen Vision, Thunder Road, Legendary Entertainment, and of course, Lionsgate. Can you talk a little bit about these pipe investors and how they may play into the long-term story here for Redbox?
Yeah, with most of those partners that you mentioned, we've had long-term relationships. My relationship with Lionsgate goes back to 2009, 2010, and we've been a proponent of their business. They've been a proponent of ours, and we're really excited to further accelerate our partnership with them as they become investors in the company. We've offered Legendary Entertainment titles for years and years and years, and one of the exciting things you mentioned, Thunder Road. We built a partnership with Basil Awanek, who runs Thunder Road. We created a brand new label called Asbury Park, and he's helping us create 12 unique movies that Redbox Entertainment will distribute as we go forward. So they're really key partners, and it was exciting to bring them into the next phase for Redbox.
So Redbox has over 40,000 kiosks and 150 retail partners. I mean, I think a lot of people are familiar with the Redbox, system, but can you talk a little bit about, who your target customers are? Why are Redbox, kiosks at certain retail locations over others? And who are you really trying to get to rent movies here?
We're really focused on the value-conscious consumer. So for $2 or less per night, you can get the latest new releases. You talked a little bit about your experiences in the open. If you think about what's changed over the years is you need to subscribe to a number of different streaming services to get every movie. And yet you can go to the Redbox and get it earlier and cheaper than anything else. And so, yes, we're really focused on that value conscious consumer. The other piece, as you see here, is we really care a lot about rewarding our consumers with incremental value. And so we do that by giving them points every time that they rent a movie or do other activities. And so if you think about that Walmart or that Dollar General or that Dollar Tree consumer, we're really geared towards them. And we think that's part of the opportunity here because, some of those consumers have not yet made that switch to digital. And as we build out our digital offerings, we're going to give them the opportunity to switch with us while still enjoying the benefits of that legacy DVD business.
Awesome. And then the next slide there is we've got some huge numbers talking about your marketing power, right? So Redbox has, 46 million email subscribers, 600 million monthly media impressions across social media, 7 million plus social media reach. Can you just talk a little bit about why it's so important that Redbox kind of has, this big database of users that it can market to here?
We know what consumers love, and we spent years building a relationship with them and having this direct to consumer connection with them. If you think about most entrants or even most streaming services, it's something that they have to go build, and yet we have this direct connection with the consumer. And so as I mentioned, when we went private about 5 years ago, our focus was really on how do we leverage what we built. Originally, Redbox was built to be a quick, fast transaction, get you in and out within 15 to 30 seconds to have that movie when you're at some kind of retail store where our kiosk exists. But what we found is that we can make a much better experience by giving you something that's personalized to you. So we now have a mobile card that you can have at the kiosk that gives you a personalized experience as you sign in. So there's been a lot of innovation that we've done, and our ability to reach and tell these consumers now about all these digital offerings, whether it be our Redbox free live TV or what we're building through this transaction, which is really about a channels business to offer them streaming services of other all through one app so that all of their content choices are on a single pane of glass.
So you mentioned the loyalty aspect a minute ago. So we have Redbox Perks, which has 39 million total members, Can you talk a little bit about Redbox Perks? What are the benefits and how is this helping your company grow?
We want consumers to be rewarded for everything that they do. And so what happens is if you rent from us physically or you rent from us digitally, we're going to give you points. And then you can use those points to consume more entertainment. So no one really offers a loyalty program in entertainment like us. We're able to earn it and use it across the different offers that we have. We'll even reward someone for trying our free live TV service. So if you watch for 30 minutes at certain times, we'll give you an additional 500 points that you can use towards other entertainment. So it's really giving that enhanced value for consumers to be able to use it and consume even more than they would through anyone else.
So we mentioned, some of those pipe investors, some of those strategic partners, they're, big movie producers. So Redbox Entertainment is working on bringing exclusive and original content to viewers. So 16 titles to date, 26 in development. And in the investor presentation, there's a call for 36 exclusive titles to be released annually. Can you talk a little bit about, obviously, why it's important to have these original titles and also how Redbox will be able to secure these 36 titles a year?
So this has been an important initiative for us that we started back in 2019. And the concept or idea was we want to make sure that we have product flow with consumers' interest that we know that they'll love. So we pick movies, whether it be actors or genres, that will really resonate with the consumers. And then what we do is we bring it out, and we're not just distributing through Redbox. We're distributing very broadly across the entire spectrum. So for interest, we brought Shout in the Cloud. Sorry, my light turned off here. We brought in Shout in the Cloud. We bought it at Toronto Film Festival in September of last year. And we brought it out on January 1st. And we brought it out on PVOD, Premium Video on Demand, for a $19.99 price point. When we release it, we're taking it everywhere. So we're taking it to Amazon and iTunes. And that really resonates with those consumers. When we brought it out to the Redbox kiosk, right, it ensures that we have it for our consumer base. And we also had it at a $6.99 video on demand price that is more attractive. And then because we don't have our own streaming service itself, we actually license those rights and make incremental margin through streaming services. So today you can find Shout in the Cloud on Hulu. And then after that comes through that window, what we're doing is we're really building this ad-supported library. So AVOD library that we're going to be able to monetize and create greater margin for us. So it's really about an opportunity of ensuring that we bring great movies to Redbox, but distribute them broadly. And that's part of why we partnered with Basil on this Asbury Park. We took what was known, in another sector with Blumhouse movies, the ability to do the same kind of low budget movie with huge opportunities for back end to really partner with actors and other talent to bring these great titles. And so ours are focused on action, where obviously Blumhouse is focused on horror. But we think there's a great opportunity for us to be able to do that. And again, because we create this partnership with talent to release across all the different spectrums and maximize revenue, they're excited to partner with Redbox Entertainment.
So you mentioned SVOD a little bit ago. There was a partnership with Showtime that saw a lot of people, 62,000 bundles were purchased. Can you talk about this SVOD and how you're getting Redbox users to subscribe to these TV channels and streaming networks and how that helps the company financially?
Chris, this is one of the most exciting things that I think that we're doing. So, we see an opportunity to help simplify the experience. If you think about your experience today, you mentioned having a number of streaming services. You're going to go to an app. You're going to try to find something to watch. You may or may not be successful. And if you're not, you move on to that next app. And so the opportunity for us is to be able to serve up all the different opportunities that you have in terms of content. So it's transactional video on demand. What's the latest new releases that are out? It's also our free services. So whether it be movies on demand for free with ads or free live TV, that's just linear channels that we've built over 100 channels so far. Or lastly, what we're building as a result of this transaction is this SVOD channels platform or premium channels platform. The opportunity then is to be able to get our consumers to subscribe, but then also to have it all in one place. So everything is here in one single screen. You're not having to move between multiple apps. All of your billing's in one place. all of your experiences in one place, and you're earning rewards across it. So just to prove that we could do it, what we did last year, as you mentioned, is we did a combination of nights at the kiosk plus a month of streaming on Showtime. And we sold 60,000 bundles of that in 6 weeks. So we know that there's interest from our consumers. And think of the power that we have of using one of those 40,000 kiosks, right? That's more retail locations than Starbucks and McDonald's combined, to be able to give consumers a free offer when they're checking out for that next streaming service. So we have this very powerful legacy business that helps feed this digital transformation and gives the consumer experience a better opportunity. And then for us, we're actually the billing or merchant of record. And so we give that opportunity to the consumer to be able to have it all in one place. And then we're remitting a big portion of that back to the streaming partner.
Awesome. I want to turn to financials for a minute here. So in fiscal 2020, revenue of $546 million. We have guidance for $498 million in fiscal 2021 and $906 million in fiscal 2022. You talked about some growth initiatives, right? So we have the original content, we have the SVOD. What goes into setting this guidance? How much of that is organic growth? How much of it is from these new initiatives? And what else do investors have to look forward to here?
So one of the things that obviously has happened over the last couple of years has been an impact to exhibition. So that means that there are a lot fewer new movies coming out. So we went from having 140 new movies in 2019 to less than 70 in 2020, and we'll have roughly 59 in 21. The opportunity here is both on the legacy side as well as the digital side. On the legacy side, we expect to be back to 140 to 150 movies. And so that really drives both our legacy physical business as well as the digital transactional on-demand business, our Redbox on-demand platform. So we expect both of those to grow significantly in the next year. We also expect this acceleration in our free live TV and ad-supported on-demand business. So as that continues to ramp, we expect growth in our digital business. And then lastly, launching this subscription channels platform is a huge opportunity for us. So again, think a streaming service that costs $8.99 a month. That revenue is going to go through our P&L. And so we're going to recognize that revenue. So it creates this great growth opportunity in our digital business.
Awesome. So, you are getting some money from this SPAC deal. So in the presentation and the press release, it mentioned that money will be used to accelerate technology towards content acquisitions and marketing initiatives. Can you just break down, what this money will be spent on and, why this deal was so important?
Yeah, again, we see this incredible opportunity for us to really transform the business. And so this allows us to accelerate that transformation. The first thing we're going to do is invest in building out this channels platform. We expect about a $10 to $15 million investment for us to build out the tech behind it. So again, making that one simple app experience all in one place. So that's the first piece. The second piece is on our free live TV and our ad-supported on-demand, the opportunity is to license more and better content. So we're going to bring in more long-tail content for consumers to enjoy. So last month, we had Hunter Killer, which you could watch, again, free with ads. We'll continue to license more content. The third is we want to lean into marketing partnerships. So just last Monday, we announced a big partnership with Roku for sale of devices at Walmart. So again, think about our unique reach to the customer, particularly at a Walmart, which is our largest retailer today. So we're going to be helping them sell 8 million devices over the coming month with an on-pack ad for Redbox, as well as a coupon inside for $5 off a movie. So, really it's incredible value to lean in. And then as it relates to Redbox Entertainment, as you mentioned, we're really ramping that up. We want to get to 3 per month, so we have 36 in a year. And so this is providing that opportunity. But the great thing about this business is we recognize revenue so fast as it goes through its different windows that we're able to pay that down very quickly. And so we'll really be investing in that acceleration of growth that comes from the dollars that come from the trust and the SPAC.
Definitely. I'm going to go ahead and jump in here. I'm going to ask a question that I think I don't expect an answer to this one, but I'm going to go ahead and fish a little bit here. So, is there any thoughts to talking to, let's say, movie theaters like AMC to maybe have some partnership where you guys could get some exclusivity, maybe some releases within a certain time? Have you guys had any conversations with movie theaters?
We talk with movie theaters. We think there's a great overlap. I mean, our consumers love watching movies. There's two times more than the general population in terms of our consumer set. So we think there's probably a way to help promote both movies. And obviously, we want the exhibitors to be really successful because we need studios to release those movies for them to come into our platform. So we think there's probably opportunity to partner over the coming months and years. But really, as you think about exclusivity, those rights come from studios. And so that's our opportunity to partner with them.
Excellent. So another question I would have is, I know that we see the on-demand and kind of the free channels. Is there any talks to maybe doing some sport partnerships with leagues or anything to try to get some sports into the on-demand platform? Anything like that in the works?
So we have a number of free channels today that have sports. So there's a Pac-12 channel, there's a beIN Sports channel. So we have some sports. And as we continue to build out that free live TV service, we absolutely expect to do that. In addition to that, as we start to offer channels, some of those channels on the premium channel side, as part of your subscription, you also get live sports. And so we think there's going to be an opportunity to expand that way as well.
Excellent. I know that everyone's leaning towards more sports with sports betting getting big. Is there any talk of maybe joining up with sports betting partnerships?
I think we have a lot of opportunities. Just thinking about retail, a lot of times our kiosks sit next to that lottery kiosk in store. And so, you think a lot about that. And we want to do what best serves our customers. And so if there's an opportunity for us to look at that and move into it, we absolutely will explore that.
Hey, well, looking forward to it. I know we got some questions in the chat, as we always like to do, is definitely draw from our chat, which, a lot of networks can't do, but we have it right here, the investors. Chris, what kind of questions do we have out there in the chat?
Yeah, I know we have a question here from Robert, and I don't know if you can get into all the specifics here, but the question is about the economics on the movies under the Redbox Entertainment umbrella. So the questions are, how much do they cost? How risky are they? Do they make money on most? So if you can just break down any of the Redbox Entertainment metrics for us here, if you're able to.
Yeah, I can talk about it generally. I can't even get into specifics on a particular title, but we've acquired movies anywhere from $200,000 up to $4 million. So we're thinking about, a budget that's somewhere between $10 and $15 million for that budget. And then we're picking up North American or US rights. So we're going to have exclusive rights for that territory. We tend to get these rights for 20 to 25 years. And what typically happens is you bring it out on demand. You make back, obviously a portion of what you're paying for the upfront. You then bring it out to other things like home entertainment with us at Redbox, sell through. So you may be seeing Redbox Entertainment's titles sold at a Walmart or a Target, and then it's going to go into that streaming window. And that streaming window is really where you create a lot of this opportunity. The good news is we haven't licensed a title yet that we've lost money on. So we're continuing to be very, very disciplined about what we bring in because we know what works. We've got 20 years of data for what our consumers love. It gives us this opportunity to really make sure that we're bringing out, what consumers want to watch. And because, again, we then also have this library we're building for our own on-demand ad-supported service, it allows us to continue to make margins for the next 15 to 20 years off of those titles.
Have another question here from Vic in the chat. Again, I don't know if you're able to get into the specifics, but I thought this one was interesting. What age group uses Redbox the most? Any insights into, you mentioned the value customer, but any insights into, ages here for target customer and usage? Yeah,
I mean, that is one of the things that I think is most interesting because if you think about it, Redbox is an access point for a lot of people. It gets really expensive if you think about layering on subscription after subscription. And so what we've tried to do is really make it accessible. So we over-index on those consumers that are 18 to 44. And it's probably not what you would expect as you think about Redbox, but it really is. If you think about your career and your disposable income, at those early stages when you have the least amount of income available. And so we see this great growth with that. And then obviously we serve consumers that are value conscious throughout their lives. With 40 million customers, obviously it's a very diverse base, but we over-index for that 18 to 44 consumer base.
I got one more here for you, and then I know we got one more in the chat. Just a broad question on, consolidation, right? We've seen with streaming companies, with media companies, we've seen a lot of consolidation in the industry. Is Redbox pursuing acquisitions? I know you can't get into specifics, but is that part of the long-term strategy here to work on some mergers and acquisitions in the industry?
Obviously right now we're focused on getting through our October 20th vote. That's the near-term focus. But I do think there's opportunity for us to be able to expand. If I think about strategic acquisitions and the opportunity, part of it is likely in the Redbox Entertainment side of the house. So are there opportunities for us to go out and acquire, whether it be movies to release or libraries? And then on the other side is ad tech. So we're thinking about being able to continue to refine and grow how we monetize ads throughout the entire ad stack. There's probably opportunities on that ad tech side to look at acquisitions as well. So we absolutely see it as an opportunity to have this new currency that we haven't had in a number of years to be able to go pursue strategic acquisitions post-close.
All right, and the last one coming from the chat, and I got to say it was a good question. Robert has been enjoying it, been waiting for Gavin to come on, and I think he's been waiting to hear this one. So he says he likes to judge CEOs based on their movie taste. So what's your favorite movie, Robert? What's your favorite movie, Gavin?
I'm a little concerned how Robert's going to take this, but my favorite movie of all time is Tommy Boy. I love Tommy Boy.
There you go.
There are so many great lines from Tommy Boy. And so I hope that that's acceptable. It does fit with our consumer base, though, too, right? Like, we just love to be entertained. It's probably not going to ever win any types of awards, but you're really going to enjoy that 1.5 to 2 hour escape that you have with the movie. So Tommy Boy is my favorite movie.
Hey, I love that answer. That's one of my all-time favorites too. Such a funny movie, and as you said, so many quotable moments. It looks like Robert's okay with that answer. He said he doesn't like Black Sheep, though. That, of course, the other big Chris Farley movie. Tommy Boy is in his top 5 all-time movies. So Galen, it looks like you got a fan for life here from the chat.
Up.
So. Again, for anyone tuning in, if you missed us at the start, we have Galen Smith, the CEO of Redbox. Company is going public with Seaport Global Acquisition Corp. Current ticker SGAM. The new ticker will be RDBX. Galen, remind us again, when was that vote date for the merger that you said a second ago?
It's October 20th.
Awesome. So we look forward to following the progress of your company. And guys, if you are SGAM shareholders, make sure you pay attention to that date so you can vote and help this merger go through. Galen, thanks for taking time out of your busy schedule and joining us on SPAC Attack today.
Yeah, thanks so much for having me. Look forward to talking to you guys in the future.
Awesome. All right. Well, you guys heard it. Another exclusive interview here on SPAC Attack. Mitch, that was a fun one, right? And great questions from the chat. I was curious about that question too. So shout out to Robert. If you are the CEO of a movie company, I think you should be prepared for that question. What's your favorite movie of all time, right? And he didn't hesitate, right?
He knew he was on his list.
He knew his answer, and that's the thing. I feel like I would have been more concerned if there would have been, I don't know, or if he would have named something, from this year, right, and not shown that he's watched quite a few movies. So I like that answer of Tommy Boy.
Not a bad pick there. And one thing I can say is that I personally have seen this company grow, because I remember when they first came out with their on-demand feature, and I used to use it, and then I kind of used it for the movies. I remember they gave me like a promotion to check it out, and I can say it's definitely gone 2, 3, 4 folds from that, with the free on demand, the free live TV, and really figuring out ways to go to these legacy players to try to partner up. I think that's such a smart idea because, I mean, at the end of the day, I mean, you can try to act like your own kind of streaming service, or you can try to use these to try to benefit and bringing the consumers, because like they said, I mean, they have all those kiosks, might as well use them. And I think they're definitely trying to use their assets to their top ability and giving you a little bit of growth. I also liked on the investor presentation, I mean, I'm sure Seaport Global Acquisition Corp like this a little bit more, but if we looked into their financials and their kind of earnings that they're looking forward, it's trading, I think, 0.5 future earnings.
I think, yeah, 0.5 enterprise value divided by revenue, maybe, compared to, I mean, some of those streaming companies in the double digits. I think Roku was like 17 or something, Netflix up there. You know, Mitch, I like the omni-channel kind of approach here, right? Someone mentioned that in the chat, omni-channel, right? And you just said it, right? They have the kiosk. They're getting into streaming. They're combining, you know, the best of both worlds. And, you know, there's a lot of companies out there that do one of those things well, and they're, you know, going to try to do all of those things well. And I think that's a good strategy. I like the fact that they make money, right? They have real revenue.
What? Money?
Yeah, they have real revenue. They have great EBITDA too, if you look at the financials. You know, so compared to a company like, you know, Netflix that's spending over $10 billion a year on original content, that's a lot of money. It's hard to make profits when you're spending that amount of money. So Redbox here going, you know, again, the value customer and going after making money. So I like that approach. There's that chart there, Mitch, that we were just talking about. I mean, that's a look at that little tiny bar for Redbox compared to the others. I mean, this guy's, if again, if you don't know, on this chart, it's good to be the small bar, right? That means that you have a lower valuation to your competition, which means that you're valued, you know, maybe more favorably here for the SPAC deal.
Scott, you have a good question, but you're a little late, man. You're a little late. I would have asked him that question. It was not a bad question in the chat. He said, did he explain why revenues decreased from 2019 to 2020? I mean, we all know that. I mean,
yeah, and
that's this pandemic.
Yeah, and they talked about that in their press release for the deal. I mean, they called it, you know, due to the pandemic. And I'll say on a personal level, Mitch, right, that, you know, we switched to doing a lot more, you know, food delivery. You know, food delivery, grocery pickup, grocery delivery, right? You weren't going to restaurants as much. You weren't going to stores as much, right? Their kiosk, you know, are at, you know, outside of restaurants, outside of Walgreens, outside of, you know, Dollar General. People aren't shopping at those stores as much, you know, as we get to the reopening. You know, again, Redbox has always been kind of an impulse buy, right? You're by the checkouts in stores, or you're outside the building. You know, you need to get customers there. And I think that's why the shift to the on-demand and the streaming is so important for the company.
All right, so let me just keep going here. I'm looking to see what I want to see in the chart. Let's go ahead and take a look at this. We've been going sideways, but now starting to go above that $10 price point. We'll see if this one can get moving into the merger vote date, and we'll see what happens there. All right, Chris, let's go ahead. Let's move forward. We got about a couple minutes left. We can do a little bit of a watch list look. Let's take a look at what stocks are out there moving fast today. And I mean, I got one that I didn't even see on the radar, now up at the top here. So let's go ahead and let's get into our watch list time here.
Sometimes left alone in the hill tonight.
All right, let's go into the watch list here. As you guys can see, opad leading on up here at 7.46%, trying to make up some of that gap. That's what it looks like, at least on the chart. We'll move forward to IronNet, because this one's interesting, as we've seen this one go all the way to 45. The question is it coming back here? I'm not sure. I mean, but let's see what we got. Chris, what are you thinking here on IronNet?
Yeah, IronNet, it looks like trading nicely today. I was trying to find news. I know we got an analyst rating recently. It's also been getting high interest on Wall Street bets. It looks like maybe a press release out today talking about the rapid growth in the defense sector. and how the company is playing into that. So it looks like maybe just the company getting out there with some brand awareness here could be helping the move today.
Yeah, we'll keep watching IronNet to see what happens here. Let's keep going towards the next one. Hyzon Motors bouncing on up there. It was up about 10%, has come down from that point, now up about 7%. We'll see if it can close the day over 7. That's what I would look at to see a reversal of trend. What are you thinking here? This one is coming down towards fighting the lows, not coming back here.
Yeah, Hyzon's an interesting one. You see that candle there, that big dip, Mitch. That was a short report put out on this company. Again, SPACs have been a huge target of short reports, and some of them have ended up, having a lot of, good statements, right? We obviously saw, with Lordstown Motors, there were some concerns and short reports called that out. With Hyzon here, though, the company has responded, and everything I've seen looks good from Hyzon's side. So I think, the big sell-off came from that short report, but I think now investors are getting back into this name going forward.
We'll definitely see what happens with this one, with the short report or not. Looks like it's trying to hold $6. We'll see if it continues to hold there. Let's go and take a look at the one that's been moving without an idea of what is going on, which is RSI. Still no answer to what happened with RSI. We'll see if it can get above this 1982, close above 20 is what we want to see for the next level up. This one has made a couple moves on up. We'll see if we get some news. Which one's it going to be? Is it going to be Fanatics? Will it be ESPN? Will it be neither of the two? Who knows? We'll find out.
I mean, we talked about this on the show yesterday, right? RSI, it's going to be an acquisition target. The question is when. Shares spiked after hours last night. I mean, they were up big this morning, Mitch. But again, there's been no hard evidence that a acquisition is coming. Again, I would have preferred to see an acquisition announced before football season or maybe after now. I think at this point it could be a distraction. But we'll see what happens. So someone out there may know something because those are some huge volume bars there coming in.
I think so. The news is out somewhere, and I don't know it, but we'll keep going at it. I did see someone mention this in my chat yesterday, AVPT in Money Mitch. We'll see it's bouncing a little bit off that $8 level. What are you thinking for AVPT, a stock that I never really thought would come back down underneath the $10? And boy, have I been wrong on this one. So what are you thinking, Chris?
Yeah, same. I mean, I did not think this one would come under $10. This is a SaaS play, a cloud play. They're a major partner to Microsoft. And if you look at Microsoft, I mean, I think Microsoft's trading near all-time highs.
Yeah.
So, here you have the sympathy play to Microsoft. If you were too late to Microsoft, I mean, Microsoft is up big because of their cloud business. If you want to play that cloud business, I think AVPT is the trade here. I'm actually liking this one under $9 here. It's been on my watch for a while. I still think this is a good long-term play. Maybe you stock it away in an IRA somewhere. They should have earnings out next month, Mitch, and hopefully then we can get a brighter look into the future for the company.
We'll see what happens with this one. Maybe we bring them back. We could definitely reach out. I'll see if we can get another interview in the future here. Let's go ahead and take a look here. Another one up today, Evolve Technologies. This is an interesting one. Has been trying to find a bottom. Now is hitting through the lows, starting to bounce back. Is this the bottom for Evolve Technologies?
Yeah, I mean, Evolve to me has always been a reopening play, right? They have the security scanners, right? And I mean, Mitch, we went to the Tigers game, right? And what did we have to do? We had to go through a security scanner. You had to empty out your pockets into those little dishes to go through the scanner. And then you had to get your stuff back. And you had to get that stuff out of a dish that a bunch of other people have touched. Evolve has those touchless scanners where you can just walk right through them. Mm-hmm. I mean, to me, that's reopening. It's also a COVID safety play, right? They also have, the gun play, right, for schools, for airports, to keep places safe. I like that, and I think this one could get more attention. I mean, we said it yesterday, Mitch, right? Look at those football stadiums. They're packed. Look at Disney World. Disney World's packed. People are out and going places. These screeners need to be places, and they also have that COVID business too, where maybe they can track temperatures with their scanners. That's an interesting concept too.
We'll see what happens with this one. I'm going to keep an eye out on it. I've been talking about how one of the biggest things for me with Evolve is not even just those COVID plays. Is I think at the end of the day, this should be required in all public schools in America. And with that being said, I'm sure Evolve agrees with me, but we'll see if they can get some federal support to make that happen. That's the one thing, Chris, that I think could really turn this story around to where next thing you know, Evolve's a $60 company. But to me, I think it's something that at least somehow if this can get to Biden, take a look at this. This is something that I definitely would like to see in public schools. I don't have kids right now, but if I did have a kid and this was put into schools, I would be a happier parent. And I can definitely say that. Let's keep going. Let's get into another stock. Let's take a look at Playboy bouncing off the bottom here. What's going to happen? I'm really concerned about this chart, Chris, because if it breaks through 20, do we get back to 10? That's my question.
Yeah, I mean, Playboy, again, I haven't seen any news out from them. We talk about the NFT play. They made that acquisition. I think we need to hear more. The one concern I had for the company is that they were kind of going in a bunch of different directions, right? They went from being, a consumer licensing business to then they, wanted to do a bunch of NFTs, and they also wanted to buy their own, lingerie brand. So which is it? Do they want to license out the brand, or do they want to control the products themselves? Or is it both? And how will that integrate going forward into the financials?
We'll see what happens with this one. I know I've been keeping a close eye on it. It did look like it wanted to pop out of this kind of little small bear pattern that you're seeing here. I would look for one dip maybe to 20, then a quick move back up through 28. Hopefully we get some catalyst, because that's what I think this stock needs. It needs some story. It doesn't have the story right now, but we'll keep an eye on it. SoFi showing up there, Chris. I know you're keeping a close eye on the SoFi. It's one of our favorite stocks here on SPAC's Attack, and for that matter, I think Benzinga overall, one of the most requested stocks to talk about. So, Chris, what are you thinking here, SoFi?
I mean, Mitch, I'm thinking maybe you need to go long SoFi, because I know that I'm long SoFi. I know that Spencer is long SoFi, and I know that Dennis is long SoFi as well. So you got some Benzinga names in the house here for SoFi. Again, for me, I'm playing this out. I want to see the bank charter come through, right? And there is some risk, right? Mm-hmm. The risk being they don't get the bank charter, or they put out a press release that says that more information is needed to get the bank charter. Those could be negatives, right? But to me, everything lines up. They hired a person with a ton of banking experience. They also raised a bunch of money, and a lot of people saw that as a negative, right? But Mitch, if there's one thing you know about banks have to have a ton of capital and a ton of money in order to be chartered, right? Because they have to have the ability to loan out money. SoFi had to raise money. So to me, that was foreshadowing. I think the bank charter gets announced by the end of the year. So for that reason, I'm long here.
For that reason, I'm out. No, I don't know. I felt like we were in Shark Tank there for a second.
Yeah.
I had to join in the party. But yeah, SoFi, keep it on watch. I like that 16 level. You always get the 14 to go off of. So at least what I always love is knowing my risk and return. Because if I can at least know that, I know the outcomes before I take the trade. And that's the important part here. Let's keep going. Let's do one more here.
How about IonQ? We got John in the chat here. So, Mitch, IonQ, right, is the quantum computing company. And this one, I didn't want to say on the show, but I had a feeling this one ran, right, going into the merger. I had a feeling we were going to dip below $10, because there were a lot of people that got in at 10 and were able to sell and take profits at 11 or 10.50. And then we saw the selling pressure. I was surprised that we came down this low. And for that reason, this is on my watch below $8. This is really where I wanted to go long, right? I didn't want to get in at 11. I wanted to wait and see how shares reacted after the merger. But for me, this is a pure play quantum computing company. They're going to be involved in a lot of different industries. Again, I have a couple different trading platforms, right? And one of them is my IRA, which is the longer term holds. This is where a company like IonQ, I think, belongs, right? You're not going to see this company, you know, get huge deals and get those quantum computers launched this month, right? This is a longer term play. But if you listen to our interviews with the CEO and with Niccolo De Masi, I'm so bullish on quantum computing. And I think this is one of the great pure plays out there.
We'll see what happens with IonQ. I definitely would take a shot down towards $5, but of course, this is a long-term company. I think something that you do have to look at it years out to see what happens with the technology use. But is there something there? Yeah, there's definitely something there. The question is, how long does it take to turn into that profitability? That's what we need to pay attention to. And as you can see, I think that's what investors did there, Chris, is they sold the rip, and now you're seeing that dip. Let's see when buyers start coming back in this one, IonQ. All right, guys, it's going to do it for us on the SPACs attack today. But like always, guys, you guys smash that like. Give us some support. Looks like we're at right now 68 likes. If you guys enjoyed us getting into Redbox today or going through some of these SPACs, hit that like button. Show us that you support us. Hopefully we can end the show today at 75 likes. We had over 200 people in the stream today. We want to continue growing like we always do here on the SPACs attack. And I'm going to go ahead and make sure that we got this redirect. Oh no, Power Hour is still not made. Oh, AB finally made it. I got him here.
Yeah, hopefully YouTube works properly today too. I mean, we all know that there were some problems yesterday with these platforms. So we kept going with one long stream, but it looks like today we'll have separate streams here. So stay tuned. You got Power Hour coming up next. I know we've got a couple interviews to knock out, and they'll be sharing trade ideas throughout the show as well.
All right, like always, guys, you guys let us know after the show what you guys thought of our interview. If you have a specific question, we could definitely reach out. And another thing is, do you have a SPAC that we haven't yet touched? That's the most important question there, because we want to bring them right here on SPACs Attack. Up next, you got the Power Hour where the hype meets the stocks. Stay tuned. You might get hot stock Luke. Who knows? Give us a thumbs up, and we'll see you next time on the one, the only, the SPACs Attack, baby.